All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. One of the best things about a market that is choppy or volatile, bear market type conditions like what we are in, is that we tend to get heavy volume levels that really are nice and can be playable, and we get volume come in throughout the day that kind of says, hey, you know what, we're top tier, or hey, we're bottom tier. One of the most fascinating things about the market this week is we have not had those levels. The market is not building levels. It's acting, more like a bull market in that respect, where it's just not building levels. Now, is this, unheard of or unusual or anything? No, this happens from time to time. We saw it happen, at least in my memory. One of the more memorable times was back during the Greek Euro crisis back in 2011. And, there were days here and there where we'd have some of the volume, patterns come in and really mark key levels. But since so much was dependent on what Angela Merkel had to say in Germany and how the Greeks responded, the market wasn't eager to establish levels that it said, well, if this breaks, then it's positive, or this breaks, it's negative, and that type of technical look at things, because they knew, okay, depending on the outcome of this, we could have X, Y, and Z happen. And right now we're in a similar type of situation where, whatever happens with China-U.S. trade relations, which have been kind of put on hold, and we don't know if we're going to get something tomorrow, and, we could, and, there could be this tweet and this comment and all of that, and we know if the market sells off that, U.S. President Trump has a little bit of a vested interest in keeping the market higher, so he's going to come out with something positive, but is it going to be meaningful, right? All of these overlays here kind of translate into the fact that the market is not creating levels that matter. This is not a market where we can come in and we can pull up S&P futures and say, oh, wait, look, we've had a 20K volume here, or we've had heavy volume here. The market is giving a tell based on it. Look at the volumes. We are in a bear market scenario, and these are bull market volumes. And it's one where, is it because of seasonality? No, we don't see volumes dry up normally till later on. This is hesitation. This is uncertainty. This is the market basically saying, we don't know. We don't know. And it could be very different. Now, there are some algorithms going, and we can see the algorithms are programmed to, to sell into some of the short, fast rallies, and that's what we've seen. In fact, today's action is indicative of that. But you'll notice every time the market makes a new low, okay, you know what? Oh, okay, all right, makes a new low, it's going to break. Oh, snap back. Okay, going to make a new low. Okay, snap back. Oh, going to make a new low. Okay, yeah. I mean, it's just one of those that very much more bull market scenario situation than bear market scenario situation. And when we can come into the daily charts and the hourly charts on the market, and it's the same thing. There's not, this is not a market where you can look and you can say, well, if 264 breaks, then that is uber bearish and it's going to flush. It could. I mean, eventually, if it's going to flush, every level's going to break, right? But is it, oh, well, this exact level, that exact level, right? No, it's not. Do the Bears still have advantages? Yeah. Not once have we seen the market close above the high from the prior day. That just hasn't happened. Here on Monday, yeah, we had a big reversal, but market didn't close above the high from the prior day, not even close. Here on Tuesday, same thing. Market ended slightly green, but didn't close above the high of the prior day. Wednesday, same thing. And today, barring an absolutely massive rally, market's not going to close above the high of the prior day. It tends to say, hey, you know what? Bears are still in control. right? Bears are still in control, and that's what we see. It doesn't mean there can't be a monster rally from here or something like that, but that's that is the read. It's one where we could say, oh, well, there's some support level underneath here. Yeah, there is. There's some support under here, right? But it's not one of those where if this exact level breaks, then this cascade is going to happen. Or if this exact level breaks, then it's going to move on up. I think that is a completely inappropriate use of technical analysis in this type of environment. And ultimately, technical textbooks are going to be written, and they're going to say, yeah, see, look at this support level, and look at this level, and when this level broke, look at what happened. And yes, in hindsight, great. But in real time, the viability of those levels, we could see, the upside levels broken and then drop. We can see the downside levels broken and then pop. This is not a market that is keying on levels. And most of the time, the market doesn't key on levels, right? That's individual stocks. Yes, there's some keying on levels. Market, only once in a while does it really key in on levels. I do think this 280, when revisited, is going to be one that is really keyed in on, in a way that others just really aren't. And so, this is a market where I don't subscribe to the fact of, oh, well, this level or that level or this level here. I think it's one where you have to look at the dynamics of what is going on. And the reality is the bulls, despite the gaps, have not returned in any sort of material way. We have still not seen the bulls willing to push the market and close it above the high from the prior day since this gap up right here at the beginning of the month. Does it mean the bulls are gone? No, we see them stepping in here and there. Today it's very timid. Today it's very, very timid. The safe haven for the bulls right now continues to be this utility sector, but it also continues to be very volatile, right? If you're trading it, it's one where we have seen it take some sharp drops, some really fast, hard, sharp drops along the way higher, which isn't exactly comforting. There with it, but utilities have the higher interest rates, and so it is a small safe haven for the investor crew, right? And you look at staples; they've held up okay, throughout all of this, as they tend to have higher dividend yields and are viewed a little bit more as safe havens. But you look at the more aggressive sectors, transports taking it on the chin again today. New lows coming in here again today, despite being down here on support, right? The proverbial support, and seeing some positives come into them, despite being oversold, breaking down here even further, and we continue to see where some of these levels just don't really matter all that much, right? You look at industrials. Well, here they are. They're right down here on support. Okay, well, it's support. Let's buy. Well, wait a minute. You go look at what just happened to transports, right? And it doesn't mean that it's going to break down. Support could ultimately hold, but what I'm saying is the support resistance that you see on charts, the levels that you see on charts right now, are rather irrelevant. We don't see algorithms keying off of them. We don't see investors keying off of them. And when support and resistance levels are relevant, you tend to see big volume keys coming in off of them. You also tend to see gaps coming off of them and gaps that hold. And so far, we've just not seen either, take place at these levels. So I want to make that clear, in terms of just levels in this market, that's not unusual. In fact, most markets, levels, whoop-de-doo. But in this market, there's been a little bit of chatter out there about key levels, and the technical validity there, I don't think you can read a whole lot into it. And, to me, the levels are as much of a guesswork as have the same to do with guesswork as they do with real technical analysis here. So what does matter? What does kind of matter? What does kind of say, hey, you know what, this, that, or the other, right? Well, what do we tend to see historically? What do we tend to see historically? Well, we tend to see this you have to go back and look in 2002 to find an instance of this. We see pullbacks, that happen quite often. This one's in the XLI, right? Is the industrial ETF. Closed, no new, doesn't close above the prior day's high, doesn't close above the prior day's high, doesn't, nope, and boom, nope, black candle, so it didn't, white candle, but not up to the prior day's high, here, doesn't close above the prior day's high, here, doesn't close above the prior day's high, and here, right here, is the first instance in this entire pullback. You'll notice it didn't happen on the bottom, but it is the first instance where the XLI closes above the high of the prior day. It doesn't mean that every day is bullish after that, but the probability of a greater trend is increased. Is this a have to all the time thing? No, but it is the reality of more prolonged pullbacks. We can look right here. It closed above the high from the prior day, right? And it didn't have any, didn't have major follow through. So this isn't a 100% type of scenario, but this is a scenario where if you're looking to get aggressively bullish and you want to be a big buyer in this market and you like where things are and you just were waiting for the market to kind of say, hey, you know what, come and buy me. That's what you're looking for. That's one of the first things that you need to see. Now you can start to, start to set up different risk-reward scenarios. Now you can start to look and say, okay, you know what? How much exposure do I want? I know this is just the first sign. This isn't, this isn't a green light saying, mortgage the house and go. But it is one of the first things that you tend to have to see before the bulls are willing to step in. And so far, we just do not have that. So the levels, do they matter? Well, yeah. The level that it matters the most? The high from the prior day. The high from the prior day is what matters most. And until then, the read is the same. The read is, hey, you know what? It's a bear market. Bears are in charge. And what is a bear market with bears in charge? It's a market that can have some really strong bounces. Right, and that's what we continue to see and what continues to play out. And that read hasn't changed from Monday, Tuesday, Wednesday, Thursday, and I don't expect it'll change tomorrow, barring some sort of trade-related news. And so that is what the market, that is what the price action is telling us. Beyond that, there's a lot of overanalysis. There's a lot of overthinking. There's a lot of or just pure speculation, right? We can go out and we can say, yeah, the market's going to go down 150 points tomorrow. Okay. Right? Well, it's going to need a piece of news out there. So do you know what that news is going to be? What's giving you that, right? There's nothing in the tea leaves here, so to speak, in the technicals. Yes, we can see that in the technicals, the downside risk is escalated and elevated, and we see that in the metrics, right? So it's a greater chance of seeing a 150-point down day tomorrow than what there is, somewhere back here in May or June. But, oh, boom, it's going to happen tomorrow. And, we see a lot of that speculation out there, but it is one where, that's what it is. It's speculation more than anything concrete. Now, today, if the market closes below the low from yesterday, is that bear advantage? Absolutely, right? Absolutely. Is that a position where you can say, hey, you know what? I'm feeling a little bearish. I want to add some bearish exposure. Absolutely, right? Absolutely. But it doesn't make you immune from a 50-point bounce, right? There's no immunity there because of that signal. But overall, the read is very simple and the read is very clear. And it's not about levels. It's not about this price or that price. It's not about this 10 to 15 point rally or this 15 to 20 point sell-off. It's about who's willing to take the market here. And so far, it continues to be the bears that are willing to really push the market when it matters. The bulls are willing to buy the snapbacks. They're willing to buy the real oversold. They're not willing to buy the gaps, and that has become very, very clear here this week. And so there needs to be something that changes that, a catalyst. So if you're bullish, obviously, as I've repeated, you're still waiting. MarketVibe here today is at a -9. It is eroded a point. It's not fully bearish, but it has eroded a point here. We've seen a little bit of erosion in the number of stocks trading below the 7-day moving average. What tends to happen when we get to these scenarios where the market vibes at -8 or -9, this number of stocks trading above the 7-day moving average tends to be 50, 60, 70, tends to be in that area. Right now it's double. A lot of that because of utilities, real estate, some of the safe haven type of names there, but there are a few tech stocks and things like that. So there is still a level of differentiation out there that the bulls can look at and say, hey, you know what? It's not all dead here just yet. But in all, the metrics are still strongly bearish. Things like the bullish percent index, still bearish. You'll notice on the last 2 days, just very unchanged. And we're probably not going to see much change in it here today as well. So anyway, that's where the market's at. Those are where some of the levels are, or maybe I should say aren't. Now, for the challenge, great. The market is what it is. I'm in cash. I sold my BABA this morning on the gap up, and I just wasn't going to sit in this and watch the time decay effect come in with the implied volatility effect. I mentioned that I'd be willing to buy it again with a different option, give myself a little more time if I got a signal today, and I haven't gotten a signal here today at all. Some will argue that this is a very bearish stack right here in terms of 3 gap ups and 3 failures to rally, right? That's not how I read it. That is not something where, you can go back and find this commonly in charts and say, oh yeah, that was really bearish. It is occasionally after rallies when you see this type of action, but it's not the type of action that is common or where there's some really, really hefty data on what the tendency is after this type of action. And it's still one where I do believe that if it closes above the high from the prior day, it's going to have a nice rally. And I will look to play it in that circumstance. So I have cash, and then I have the $300 on the VXX puts here. And VXX really hasn't gone anywhere since I got in. It tried to push on or gap on lower yesterday, gapped on lower today, has kind of created this 3 white candle side by side element here, and this is read typically by technicians as bullish. Okay, meaning it goes higher, but you don't have to go very far, even in the VXX, to find lots of situations where that's just not the case. Where it can fall big after that. So I don't read too much into it. It's also, this is not a technical play, at least for me, and would love to see it. Would love to see it tumble below 39 into the close, and I'd slap on down to 37, 36 tomorrow, but we'll see. Again, this is one that I've mentioned I'm not going to, really analyze. I got in for the risk-reward component here, and if the market, does push on higher, we see the VXX, we'll see the VXX push sharply down, and, it's probably not realistic that my $300 turns into, $1,200 or $1,500 right here, given the fact that it's what it's done over the last 2 days. But for it to turn into 600, 800, and even 900, that's still on the table here for it. And so going to hold that here. Now, as far as adding another position, I've talked about a few stocks today, the American Airlines of the world, the Targets of the world, I talked about gold miners yesterday. I've been watching them today as they've kind of pulled back here just a little bit, and we've seen the option values really kind of start to compress here in them. But overall, I don't have something where I go, man, I think the odds are strongly in my favor. Where I go, man, I can lay my head on the pillow tonight and say, you know what, the chances of this doing well for me tomorrow are really good, or beginning of next week are really good. I think there's a lot of stuff that is like American Express, where it's in a position to change pretty rapidly based on any kind of news. And so how aggressive do I want to get? I don't. It's one where we don't see the market getting aggressive. We don't see the market building levels. We don't see the market giving any, major type of tell. And if the market does flush, I want to have plenty of cash to buy that wow day. That, hey, you know what? Market's down 120 points today. I want to be able to step in. I want to be able to step in aggressively. And, if it does decide, okay, we're going to push on higher, well, great. We'll start to see things close above their high from the prior day, and I'll look to step in that scenario. So, where it sits and some of the wish-wash that it sits in right now, I'll continue to trade it as I have, and not step in and take too much of that option risk that is really high right now. Heck, we saw it with Baba, right? We really saw that in action with that stock. I'll take a look here about an hour from now, 30 minutes before the market closes, see if there's any kind of change here. As we know, the market has made some moves into the close here over the last couple weeks. Most of them have been just absolutely insignificant and have said nothing about the next day or next day's price action. I don't expect that the close on the market today will say anything about what's going to happen going forward as well. But if there is some sort of news, some sort of tag there, maybe that switches here, or some sort of heavy volume that comes in that could switch. And if there is a switch there, I will look to react to it. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.